And how will all of these overnight cues impact our own markets? We have our research team joining in with the trade setup, the stocks that are likely to be in the news, and the setup on the FNO side as well. And first up, Vinny is joining in to get all the market cues we need to watch out for. Vinny, good morning. We gave up almost half of what we gained on Thursday, but what's the setup looking like this morning?
So seems like, muted start is what one could be watching out for today, because in terms of yesterday, Friday's trading session in US surely ended on the positive note. But like you were mentioning, in the Indian front and in the Indian markets, we saw a halt coming in the New Year rally on Friday. Nifty ended 184 points down. 24,000 is what it just managed to hold on to. Now, what was on the losing side on Friday was Wipro, TechM, so the IT names were in focus, with private banks like HDFC Bank, ICICI Bank among the top losers, and Adani Ports in the Nifty 50 top losers. Now, for the week, though, Nifty managed to see a rise of almost a percent. Mid-cap, small-cap, mid-cap specifically outperformed the benchmark indices, gaining nearly 2% for the week. So it'll be interesting to see how we see that move coming in from the broader market front, as well as where the Nifty is headed in today's trading session. Now, FIIs, they also actually saw a bit of a selling coming in on Friday. We saw 4,227 crores worth selling coming in from the FI side, while DLI managed to buy around 820 crores. Key factors that we're keeping an eye on, we had a whole host of updates that came in over the weekend. So individual stock moves on the back of that. IT earnings that will be starting this week. So Infosys, TCS, keep an eye out on that. And FII trends, how are they shaping up with the earnings season starting? Will that change their sentiment? And maybe a buy coming in from FIIs is something that is a key factor, as well as on the global front, the US job data is key one to watch out for this year to begin with. And Nifty implied open indicating a bit of a muted start. So keeping an eye out on the Indian markets as of now.
New year begins, as does the earnings season. Vinny, thanks a lot for that. Over to Abhishek now, who will list out the stocks that you need to watch. Plenty on his list today. Abhishek, good morning.
Well, yes, 21 lenders gave their business update from Friday post-market to Saturday night. To begin with, Dabur has given a Q3 business update. The company says rural consumption is resilient. General trade is still under pressure. Marico has also given their business update. They say that the sector witnessed steady demand and trends on the back of improving rural consumption and stable sentiment in the urban market. Now, Kotak Mahindra Bank, their CEO and CTO has resigned with effect from 15th of February 2025. Now, ICICI Bank, they have got a GST demand worth about 100.75 crores. SDFC Bank and their affiliates, that is the group members, have got permission to take up 9.5% stake each in AU Small Finance Bank and Capital SFB. Talking about Q3 FY25 business update, SDFC Bank, their loan growth has been weak as the concentration is on reducing the CD ratio. So advances growth is at 3% YOY and 0.9% sequentially. In this, the other wholesale book has actually declined by more than 10%. So sell down of loans impacting the loan growth this time around. Credit deposit ratio is well below the 100% mark and on towards their trajectory of 90%. Bajaj Finance AUM growth remains robust despite being at 7-quarter low run rate. So 28% growth YOY and about 6.5% sequentially. And their cross-sell rate has also improved to 7.25% versus 6.2% that they had in the previous quarter. Talking about other strong loan growth that we have seen from the business momentum, Bajaj Housing Finance, their AUM growth was 26% YOY and 5.5% sequentially. AU Small Finance Bank, their loan growth was more than 5% quarter on quarter. IDBI Bank, their loan growth was 18.2% YOY and 3% sequentially. UCO Bank, now that's a surprise list, growing at 16% YOY and about 5% sequentially. Bank of India, another surprise, more than 15% YOY and about 8.5% sequentially. In terms of soft or weak, business update coming in Q3, IndusInd Bank, the deposit growth on a YOY basis is the weakest in last 16 quarters, coming in at 11%, and it's down 0.75% quarter on quarter. It's the first time decline that you are seeing in their deposits on a sequential basis in last 19 quarters. Suryodaya Small Finance Bank, their asset quality has deteriorated massively. Gross NPA ratio has inched up to 5.5% from 2.9% in the previous quarter. Bandhan Bank, that's also facing a deposit crunch. Their deposits have declined more than 1% quarter on quarter. L&T Finance, their rural business has taken a hit. So rural business finance disbursements are down 16% YOY and more than 15% quarter on quarter. RBL Bank, their business momentum is one of the lowest that you are seeing in years. Deposit growth of 15% YOY is at 9-quarter low and loan growth of 13.3% is at 5-quarter low. Back to you.
It almost felt like that list was never ending, but Abhishek, thanks a lot for that. And now joining in with updates from the FNO space is the newest Papa Bear in town, Mangalam Malu. Mangalam, welcome back and many congratulations to you first up. You know, we gave up, we're still at that crucial 24,000 mark, right? What's the setup on the FNO side looking like?
Thank you so much. I'd like to believe I'm a Papa Bull more than a Papa Bear, but be that as it may, thank you so much for your wishes, Hormaz. Yes, the GIFT Nifty is indicating a positive start. We held on to that 24,000 mark. That tells you that maybe the range that we were trading at has moved a little higher. What's interesting, however, is that there is still volatility in that range. You know, if you look at the Nifty moves over the last 3 trading sessions, I'll be looking at them just to, apprise myself of what the market has been doing over the last 2 weeks. 98 points higher on Wednesday, 445 points higher on Thursday, and then a 200-point decline that we saw on Friday itself. But between December 31st low and Jan 2nd high, we actually saw a rally of over 750 points. So I was just trying to understand what exactly took place out there. The rally, of course, was led by strong auto sales and FII short covering on Thursday, which was the weekly options expiry day. But then came the draggers on Friday, which was HDFC Bank and the IT stocks. And both of them in focus. IT stocks ahead of big earnings right now, and HDFC Bank ahead of their Q3 update that Abhishek just spoke about. The other couple of factors that are playing out, the FIIs, they sold on Wednesday, bought on Thursday, sold again on Friday, 4,200 odd crores. And even in index futures, the short covering was not long lasting apart from Thursday, because on Friday they sold about 2,000 odd crores and added 23,000 shorts back again. So if you look at the FII exposure in index futures, which started with a negative 2.34 lakh on Jan 1, is now back to negative 2.3 lakh itself, and long exposure from 14% moved to 20% and now back to 17% itself. What does all of this mean? It means that the Nifty may trade in a range, but if it were to break out of that range, the street is positioned for that as well. 24,100 call is fairly active for a premium of 112 rupees, and 24,000 put also active for a premium of 150 rupees. That tells you that the range could be 23,800 to 24,200. But if we were to break out or break down of that range, there has been positions taken at the 24,500 call and the 23,600 put as well. So those are a couple of levels we'll keep an eye out on. From a technical standpoint, definitely watching out for the 200-day moving average as the first support, 23,900 that is. And on the way up, the Nifty does congest around that 24,150 mark, largely because of the 20-day moving average and the 50-day moving average. Were we to cross that, maybe a dash towards that 24,500 mark.
Oh, we'll anticipate that for sure. Mangalam, thanks a lot for that.